Good morning. I'm Wichard Cilliers from TreasuryONE, Head of Dealing and Market Risk. Joining me today for a quick catch-up on what happened with the medium-term budget speech yesterday on the currency is Andre Cilliers, Currency Strategist at TreasuryONE. Morning, Andre. What are some of the key takeaways from the medium-term budget speech yesterday?
Good morning. Well, I think one of the key takeaways is that Mr. Mboweni was very upfront and open about the debt that we're incurring, the unsustainability of continuously incurring debt, and he had really stressed it out very clearly to everybody that if we continue on the current fiscal path with increased debt, that we will be pushed over the cliff and that we are running into the possibility of default.
And the GDP projections, that's going upwards, and we're projecting 95% of debt to GDP in 2026. Do you think that's sustainable, and do you think there's anything else that Mr. Mboweni can do to bring that debt to GDP down?
Well, the only thing that he can really do to bring the debt down is by curbing spending from the government side. Now, Mr. Mboweni had outlined these projections for how we will be have debt decline going into the future. Very specifically, he mentioned that the wage bill needs to be cut. He had given the indications of how we will be doing it, and that is one of the problems. And the problem there being that you need the buy-in of the unions. I doubt whether you'll get that easily because he's forecasting or saying that he will have a wage bill freeze in terms of increases going forward for the next 3 years. But we have to keep in mind that already there is a court case because the last year of increases was not implemented, and that is currently in front of the courts. If the government loses that case, then that places in jeopardy any cutting in the wage bill going forward. Apart from that, he's outlined and given us projections of how we will have revenue increased from a tax base side. But the main thing here being that everything is based on the growth projections for the economy going forward, as he outlined there. If we do not get those growth projections, if we do not get the job creation that is indicated, then we will obviously not be meeting our targets in terms of the revenue that we will be generating from a tax side, and that will place in jeopardy the 95% that he projects where the debt of GDP will turn. He's also indicated very clearly that if we do not have the fiscal discipline and we do not make the fiscal cuts, that we could, even a year before that 95% breach the 100% level, and if we do not have the proper rollovers from short-term debt to long-term debt, that we could be faced with a rollover crisis and the ability of not being able to fund the repayments of debt.
And then obviously the big point that was also raised is throwing more money at the SAA, the new SAA, 10.5 billion rand. What is your view on throwing more money at failed state-owned enterprises?
Well, that's like a refuse truck coming in to collect the refuse. And the only thing that they're collecting here is our valuable tax income that needs to be spent rather on productive things like job creation, money that could rather go to infrastructure spending that actually creates jobs and will create future income for the government from a tax collection base. It's now being dumped into an empty hole, being thrown on a rubbish dump. And this is one of the biggest problems that we've continuously been speaking about, is that the more that we continue with that, the more and bigger the possibility of piling up even more debt into unproductive and non-sustainable entities, the so-called SOEs.
And then just lastly, on the currency front, obviously there was the rand weakened a little bit. Everybody thought it's in the back of the medium-term budget speech, but emerging markets were under pressure yesterday because of the stronger dollar. What is your view in the short term and a little bit in the longer term for the local currency?
Well, we just have to look at this morning. We are currently, as we speak, trading around the 60 and 30 levels, and that's the levels that we were prior to the starting of the budget speech. So the movement yesterday up to the 1650s had absolutely nothing to do with Mr. Mbuyeni's budget speech. The rand is currently very, very resilient, and more faced with what happens internationally in terms of the value of the dollar, what happens in terms of the expectations of the growth in the world economy, COVID-19, US elections, etc. So the rand will continue to be resilient. We must keep in mind that the rand is currently still in an undervalued situation, and so there is still room for further strengthening. So in the very, very short term, and especially in December, and if we go back to the traditional movements of the rand, we have seen the rand strengthening quite significantly over the last couple of years towards the end of the year. Very much the same can be expected, and if Mr. Biden comes in and wins the election, as is currently the expectation, we can expect the dollar to lose some of its value. Some of the uncertainty due to the elections will obviously fall by the wayside, and we can expect the rand to most probably test the 16 levels. So from an importer perspective, I would be cautious to run into positions that's way too big. Exporters, I would still in the short term take opportunities when they arise and take forward cover. Longer term, going into next year, especially the second half of next year, I would expect some further weakening again, and we can retrace back to the 1675, 1680 levels. But we will have quite some volatility, and in the short term, both importers and exporters should really look at taking protection.
Thank you so much for your time.
It's a pleasure.